Hello, everyone. Welcome back to the Goody Life, where life is good and everything is great. And I am Dr. Goody, and the Goody Life is all about finding motivation, inspiration, and self growth in all aspects and areas of your life. And today, we're going to talk about finding motivation in your financial aspect of your life. So, if you watch my video from last week, I talked about various ways to make an income from working from home. And at the end of it, I mentioned that we will be talking about investment this week. And I thought, why not bring in an expert to tell us on this, to talk about this subject matter? Because financial investment is a huge part of everyone's life. And I think it's important, especially during this time, for us to figure out what are the best type and best way to invest in our financial self and our financial future. I do want to make one small disclaimer before I introduce my guest. Me nor my guest is your financial advisor. This video is solely for informational and educational purposes only. So, with no further ado, I want to introduce my guest, my friend, Aaron. Hi, Aaron.
Hey Goody, how you doing?
Good, good. How are you?
I'm doing fantastic. How are you doing?
Very well, very well. Thank you so much for taking the time out of your day and joining me in today to tell us about our financial investment and our financial futures and way we can kind of get more involved and secure that part of our life. And before we get started, I can introduce Aaron, but I want him to tell us a little bit. Can you tell us a little bit about yourself and your background?
Sure. So my name's Aaron Lam. I got a degree in finance from San Jose State, and I actually had a lot of experience in the financial field in different industries. I initially started within banking, then I went into the insurance industry, and now I'm currently in mortgages. And all of them are really important things that all kind of intertwine with our natural everyday life, and we might not be too aware of it. And so I wanted to go in all those fields so I could speak on all those different topics. I can't say I'm an expert in everything, but I know enough to at least answer most, if not all of your questions.
Yeah, perfect. Thank you so much for that. And I personally, I have known you for a couple of years now, and I really like Aaron's way of the way he looks at financial freedom and financial investment in general. And that's why I thought he would be a great person to talk on this subject matter for today's video. So my first question is to you, which I'm pretty sure a lot of people have. During this pandemic and just everything that we're going through right now, a lot of people are freaking out about the economy, their finances, their money, investments. I guess what are some ways or how are some ways people can invest safely for themselves right now and to secure their future also?
So that is pretty much the ultimate question. How do we properly invest and safely? And most people think the safest place to invest is at the bank
Mhm.
because the bank is safe. It's what we were taught to do is have our money at the bank because that is where they will hold it.
Yeah.
But we're not too aware of what they do with our money, how the system really works, and is that really the safest place? Well, one thing I do want to bring to everyone's attention is the power of inflation. Inflation is set by the federal government to grow around 2% per year. That's what they aim to do, 2% every single year. So if you leave your money at Wells Fargo or JP Morgan or maybe some sort of credit union and you're getting maybe 0.01 to 1% on your money,
Mhm.
you're actually losing your buying power over time, even if your money increases technically in the account. And so I believe personally that a bank is not the best place to keep your money. I do believe that either the stock market or real estate or insurance or bonds are better vehicles than than the bank because guess what the bank's doing? They're taking your money and they're putting it in all of those things instead so that they get a higher return.
Wow.
So why not just do the same exact thing that they're doing and cut out the middleman?
Oh, wow. Thank you. I never thought about it that way. And I see what you mean when you say, like, most of us are taught, even myself growing up, my parents always taught me about the basic checking and saving accounts. So
Yes.
that's all we really know about. And if we don't know about these other things, we have no idea where to go or how to invest and what can be much more beneficial to us, you see?
Absolutely. One thing I really try and do in my initiative in really getting into the finance field is to educate more people about finance. Because if you look at the numbers and the statistics, most people reaching the retirement age around 65 in their 401ks on average have around $100,000. And $100,000 might seem like a lot, but for the next 25 years of your life, that is really only $4,000 a year. Let's just say it's 20, that's only $5,000 a year. And so this is the situation that the majority of retiring Americans are in today. And that's why people need to be more wary of their investments, more wary of where their money's going, so they can actually not have to worry about finding another job or holding onto their job in retirement, and they can actually live their best years doing what they want to do.
That's scary to think about it when you break down the numbers like that, just to hear
Yeah.
that numbers like, oh my goodness, I'm working all my life towards retirement. What does that mean? Only $4,000
Yeah,
a year.
right.
So I know I hear these terms all the time: mutual funds, CDs, stocks, bonds. And there's all these different types of investments, and most of us don't know what it actually entails, right? So, can you
Mhm.
tell us a little bit about the different types of investments that's out there, maybe like from low risk to high risk, so we have a little bit more knowledge on what's out there and how we can invest?
Sure. So to go with the lowest risk, technically speaking, I would say that is the bank. Now, banks are not absolutely zero risk at all, but they're not risky because they're easy to go to. And then they're technically really easy to, well, put their money in and grow. You can open a savings account, pretty simple. They're going to put your money, or they're going to give you interest, right? Now, what
Mhm.
the bank does with that money is probably the next riskiest thing, right? And they put that money into treasury bonds and actually just regular corporate bonds. And they might be earning around 2, 3, maybe even 4% on your money that they invest. And they give you around nothing to 1% a year, maybe 2% if you're at a really good credit union, right?
Yeah, yeah,
Point
yeah.
is, they're actually putting your money in bonds. Now, why are bonds riskier? Bonds are technically loans. So imagine if I gave Goody a loan for $100,000. I know and I understand as an investor that my money in my time is valuable. So I'm not just going to give Goody money without having some sort of return in the long run. So I'm going to want her to pay me back 3 or 4% every single year, and then pay me back that full $100,000 later, right? But what's the risk for me? Yes, it's good I can make a percentage return, but what if Goody doesn't pay back the money to me? That's called defaulting. And that's the risk. If you're going to invest your money in, let's just say, Tesla, you give them $100,000 and then Tesla goes bankrupt, you lost that money. However, there's always a rule that the more risk, the more return you expect. So if I think you're going to potentially go bankrupt, I might not even take that risk, or there's a high chance that you can't really pay the money back, but there's also a good chance that you can grow a lot. I'm gonna be like, well, I don't know if you're worth the risk, but I'm gonna maybe put that risk, but I expect more money in return. More risk, more return, and that's almost like a natural law.
Yeah, no, that's interesting the way you're putting it together, like if you're going high risk, right? You have the potential of making more, but you can also, there's the default of where you can lose out also. Exactly. What are these types of investments?
So bonds, which
Mhm.
they just covered, are pretty much loans, and
Okay.
you're getting paid back money on that loan, right?
Okay.
If you're paying mortgage, you pay interest on top of that mortgage. Stocks are
Mhm.
technically ownership in a company. A
Oh.
company goes to the public market to raise funds because they can't accumulate any more debt. Imagine if you had a credit card with $10 million on it.
Mhm.
Your interest might be really high, your credit score is probably going to be really bad, and then the next time you try and get another loan, they're going to be like, well, you know what, you have 10 million in credit card debt, I think I'm going to charge you 30% interest. And you're like, 30% interest? No way, Jose.
Yeah.
I'm going to try and find my money elsewhere. And what you start doing, you start selling shares of your company, Goody Inc. or whatever it may be.
Yeah.
And then you're like, I can't raise any more debt, but I'm going to give shares of Goody Inc. and I'm going to raise money in the public. So
Mm.
they go to an investment bank, they offer the shares, and all of a sudden they're selling their shares in the public market and raising money like that. That
Mm.
has zero interest. There's no obligations to pay back technically. However, you, well, ideally speaking, the investor does want some sort of return.
Sure.
And the reason why the stock market is considered riskier than bonds in the short term is because it's volatile. Because what controls, they say that the stock market is actually a voting machine in the short term and a weighing machine in the long term. What does that mean? It means in the short term, people can vote buy, sell, buy, sell, buy, sell, and that will control the market. But in the long term, if something like a good company is still weighted as a good company, it's a good company. If it's a bad company that people will say buy, 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 and then eventually people are going to realize like, oh no, this is a bad company, and it's weighing as a bad company, they're going to sell it back to where it belongs. Okay, so the stock market in the short term is technically riskier because of all the different players that you cannot control, right? And so that's in the short term. On the second thing with stocks, there's another thing called dividends. Dividends are not paid by all companies, but that's a return of the investor's investment into that stock. So if a stock, so most people go into a stock for two reasons. One, for the stock price to go up, and two, to get some sort of interest back. That interest is called dividends, right? And on average, that can be around 2.5% to 3% per stock, which is more than you'll get at the bank.
Yeah.
The cool thing is that one, the stock price could still go up, so you can still make more money there. But two, dividends increase over time in a good company. So if you buy Coca-Cola stock, they are historically known to say, hey, look, I'm going to give you maybe $1 a share per stock, but next year I might give you $1.10. Then the year after that, $1.20, and $1.30, and $1.40. Your money is actually, your income from those dividends are increasing at a very fast rate, much faster than that 2% inflation.
Yeah.
And so now you're outpacing, you're increasing your income, you're outpacing inflation, and now you're actually getting yourself into a situation where your money's growing properly. And it always makes sense that stocks will always outpace inflation, because if there's inflation in the market and the prices of things are going up, the people selling those things that are increasing the prices are companies, right? And so as prices go up, their profits go up. And so if you partake and you're an investor within these companies, you are being a part owner in these profits, and therefore your money is growing with that same inflation.
Yeah.
Okay. Right. And I guess on the furthest end would be real estate. Real estate can be riskier, but it also cannot be. The risk with real estate as an investment, not as a home, which is a totally separate thing, is that if you invest in a property, that house property value can go down by like thousands and thousands of dollars in a couple of years. You might buy a house at $300,000. Let's say you buy it in Nevada or something, Las Vegas. All of a sudden, Vegas isn't looking too hot. Things aren't going very well, and your house price sinks $50,000 in price. You just lost $50,000 in your investment right then and there. Now, yes, you can get rental income. Yes, you're building equity, but the sudden drop in price is always a worry. Not only that, you have to put in more work. There's always the worries of, oh my gosh, what if this guy destroys my house? So there is more risk with, these extra factors, right, involved. However, the payout is phenomenal. For one, you can also have the money go up $50,000. You can take that money out, and then you can do whatever with it you want, or you can just sell the house and make a profit, right? Tax free.
Exactly.
Up to a certain point, that is. But let's just say under $250,000, all your house profit on your house is tax free. And so, point is, like, the barrier of entry too with the house is a little bit higher, because your initial investment needs to be like a lot more. You might have to put in a 20% down on something that's already hundreds of thousands of dollars, and that's gonna be like definitely at least $40,000 to $50,000, right? And so that's a big investment. And if you lose that investment, that's gone. That's really gone for you, and you might just happen to get a bad house. You might not know what you're doing. Most people don't. I don't know anything about real estate really, but I do know that that's kind of why there's a high risk and high return. Now, what they do say though is that if you really want to get rich, especially when we're younger, the best way to do it is real estate. But make sure you get the right expertise and knowledge, and make sure you go to credible sources that have done it before, so you can learn how to do these things properly. I'm not that person, by the way.
And I'm glad you point that out. It's really important if people want to learn more about this subject matter for them to really look up and find experts and more training in these specific areas. Of course, this video is very generic and we're just talking about all these different and various ways that's out there for one to make an income for themselves and how to invest in themselves. And
Yes.
what I grasped from what you said just now, and correct me if I miss anything here. So, like a low risk is kind of like investing with the bank, getting your CDs or your saving accounts where you're grabbing a little bit of an interest, a small interest. But
Mhm.
the bigger ones is like stocks and real estate,
Yes.
correct? All
Absolutely.
right. So,
Mhm.
so there people have it, the way, different ways to invest for themselves. So
Yeah.
I do have another, go ahead. You're going to say something.
And the reason why banks are safer than these other vehicles is because banks are willing to take the risk of giving you money and then take your money and invest it again into those other vehicles like stocks, real estate,
Mhm.
insurance, other types of bonds, commodities, all sorts of different things. So they're willing to take that risk.
Yeah.
They're taking the risk away from you, doing it for you, but giving you less return as a result.
Yeah. The risk that people are not taking, basically.
Basically, yeah, basically.
So you're sharing all this vital information with us. And I know sometimes for some of us, how does someone with zero experience or minimal knowledge in this field, how do they invest or where do they look for more information to invest to make these types of investment for themselves and make sure that it's safe?
Well, they do say that all great secrets are in books. I'm
Okay.
personally a big book reader, but for those of you that don't like books, I'm going to give you the easy answer. It's probably YouTube.
Okay. All right.
YouTube is the new world's encyclopedia the way I see it. You can learn how to change a tire, you can learn how to change a light bulb, you can learn how to invest in stocks and bonds and real estate and all that stuff. And
Okay.
so I think going to sources like Goody's channel is a great way to learn about these kind of things. Like you can learn about anything here, from experts directly, and they're just sharing the knowledge for free. I mean, it's cheaper than even a book, right? Now, if I were to give some book recommendations,
Mhm.
I think really learn why you're doing this first. And one of the best ways to do that is to read a book called Rich Dad Poor Dad, because that really explains the idea behind what wealth really is. Because a lot of the time people say more money, more problems. That can be true. Yet so many people also say that money is equivalent to freedom. And that kind of sounds like counterintuitive. They don't seem to mean the same thing. Now, based on what I researched, and my personal opinion is that I do believe it can be both, but I do believe that if you, the way you build your money, your wealth, your resources really does play into that, how your freedom can really work there. And the good thing about what this book really talks about in the Rich Dad Poor Dad is the idea that it's not about how much money you make. It's not about how much money you have. It's about how your money's working for you and how that can give you back your time.
Yes, absolutely.
So a lot of us might be working 40-hour work weeks, maybe even longer, plus traffic. Hopefully you guys aren't driving as much right now during COVID. But imagine in a world where you didn't have to do that. Imagine where it's your choice if you want to work. Imagine if you had all the money coming in where you didn't have to actually, lift a finger. You can just do whatever you wanted to do. Maybe you want to work, maybe you don't. It's all up to you. That's the idea of financial freedom, because we have so many things we worry about every single day. Maybe the kids, maybe taking them to school, maybe our work, maybe our relationships. We have so many different things we have to worry about. And one of the biggest ones are finances.
Yes, great.
Imagine if finances were not actually that same problem. And then you finally have that other thing bugging you, which is potentially the biggest thing bugging you, actually just disappearing and fading away. No longer something you need to worry about. In the end of the day, you have a little bit more freedom in your own headspace. And at the very least, you can feel like you have a little bit more freedom and control in your own life.
Absolutely. I agree with you 100% on that. I think a lot of people, it's not just about, they're looking for a way of how can they make some income? How can they have income to where they live comfortably? It's
Yes.
not just about becoming a billionaire overnight. That'd be nice for some, but that's not the only thing, right? Because a lot of us, we still like to work, we still like to have a job and things like that, but you just want to feel secure. At the end of the day, you want to feel secure that if you want to just say, okay, I'm going to take a vacation next year, but I don't have to worry about clocking in overtime or making all these additional side incomes. Just having a way of how I know, okay, this is where my stash is. This is how I can make it in a
Mhm.
easy way, in an easy way.
Right. Absolutely.
Yes. And I'm glad you recommended that book. Is there anything else? I know you mentioned YouTube and you talked about one book already, but is there anything else you think that would be vital for us to know about investment or just in our financial future? Is there anything else you can add for us?
Please invest in yourself. The reason why that the average 401k in the country for people about to retire is around $100,000 is because you don't realize what's going on in the back end. If you're able to cut out these other money managers, these hedge fund managers, all these guys that are pretty much charging you fees you're not aware of, then you're actually going to be living a much better retirement and having a lot more money in the long run.
Okay.
So that's why you got to learn, and I think we're the perfect generation for this, but that's why you got to really learn how to invest for yourself, because a small 1 to 2% return per year can be 2 to 3 times the amount of money you end up in retirement, and that is huge. And so I cannot emphasize enough, like, look, try and take back the power for yourself. Make sure that you're the one that's empowered. You're the one that's really the one that's making your own financial decisions, and don't just trust other people, because a lot of the time they might not even know what they're doing.
Yeah.
So look for the answers yourself and cut out the middleman.
Yeah.
That's what I would
Learn
say.
the learn the tips and tricks on your own. All right.
Yes.
Utilize, like you said, that's what YouTube is there for. That's what these books are there for. Read it, learn it, and then invest in yourself, because once you make those decisions, also you will be, you have more knowledge, you'll be smarter at those choices.
Absolutely.
Yeah. And I know you talk a lot about financial freedom and you have a podcast. So if people wanted to learn a little bit more or just hear from you, how can they reach you?
So I am one of the co-creators of my little podcast. It's on Facebook and it's
Okay.
called The Bread Club.
Okay.
Bread as in money. And
Good.
so it's a private group, but if you guys do request to join, we'll most likely let you in. We
Okay.
just talk about what stock picks we think are good. I was watching one today, actually. One of my stocks went up 60%. Um, Now it's just because like I'm able to watch these things and I know what it's not like I put in $1 million in there either. I was just putting in a little bit of money, but we do kind of go over how we make our decisions, how we take our risks, and what stocks we think are good in the market. And on top of that, we teach other financial strategies. We really want people to understand the whole scope of things,
Okay.
understand real estate, understand bonds, understand mutual funds, all of those different things. So please watch us and tune into the Bread Club. See if you like what you see if you like our content, and maybe you can probably just join the group if you like. And I'm also going to be starting a YouTube channel pretty soon called Lam Finance or Aaron Lam Finance, one of the two. And I'll be talking about my own personal thoughts on what's going on in the market, what stocks to choose, how to properly invest, how to cut out the middlemen, and how to save all those dollars for yourself and your family.
Great. Thank you. So podcast, and I can't wait to see your YouTube because I know you have a lot of knowledge and your concept is really awesome. The one that you're trying to talk about, how to help people be, how to have
Yes,
financial freedom in their lives. I really want to thank you so much for joining me today, sharing your knowledge with us. I think we all learned a little bit more about investments, the different types that's out there. Now we can also go out, read more about it, find more information on YouTube, check in on your podcast to have more knowledge on this stuff. And that way we'll be able to make a better financial investment for ourselves, not just for now, but for our future also. So I want to thank you so much, Aaron, for joining us today.
of course. Thank you so much for having me, Goody.
Yeah, thank you very much. And don't forget, guys, if you like this video and is there something in particular that you would like to see Aaron talk about, comment below so he'll come back, join us, and tell us more on, elaborate more on that subject matter. Don't forget to hit the subscribe, like, comment, and share button below. And I'll see you all next week. Bye for now.